So Google is my largest position, and I haven't bought in a couple of years, but it just grew to be my largest position. I've owned it for about 10 years, and this isn't a recommendation to buy or sell. This is just me walking through my process and my thoughts. But I'll go over quickly what I like about Google and why, even though I like it, I may sell some soon. So as I said, you should always compare whatever you're thinking of investing in to the default, which for most people should be the S&P 500 index. And if you just continually invest in dollar cost average, you'll do the average of the index, which is about 10% a year, and which is great for most people because most professional money managers can't beat the index. However, currently it's pretty pricey. So it's trading at about 30 times earnings for the average of everything in the index. So typically it's about 15 or 16 times earnings, depending on whether you go by the mean or the median. And the mean is the average and the median is the middle part. But at 30 times that, that's pretty high. So whereas normally I would say, yeah, just keep putting it in the S&P 500. If the S&P 500 was trading how it normally trades, or even when you're getting a really good price on it, it's kind of high, so it makes me cautious. However, if the index as a whole is trading at 30 times earnings on average, and Google is trading at 27 times earnings, that is lower than the average of the index. And you have to ask yourself, is Google a better company than some of the other things in the index like Palantir that's trading at several hundred times earnings, and Tesla that's trading at several hundred times earnings, or challenged companies like Occidental and Chevron, which are energy plays and are very cyclical? 27 times earnings when the rest of the index is 30 times earnings. I think that sounds pretty good to me, which is why I've held on to it. And if you consider YouTube a search engine, then Alphabet Google has the number one and number two search engines, which are Google and YouTube. And they're also a dominant player in AI. So everyone likes to talk about ChatGPT, but I routinely use Gemini. I think it's great. And not only that, but Google has the money to develop has the money to develop Gemini, and ChatGPT has to keep getting funding from places like Nvidia and Microsoft, and they actually lose money. And I lived through the dot-com bust, and a lot of internet companies that seemed like good ideas didn't survive because they didn't have profitable business models, but Google is very profitable, and they have other very profitable businesses that can support the AI sprint. So they have Google, they have YouTube, they also have the cloud business, and everyone is competing against the clear winner, which is AWS, Amazon Web Services, and they are the number one cloud competitor by far. But don't feel bad for people like Alphabet and Microsoft because their cloud business is growing at double digits, like 20-something% a year. And when people are bullish on it, they say, well, it's not growing 50% a year, it's growing 20-something% a year. You find me another business that is growing 20-something% a year, and I'll invest in that. And also, Alphabet Google has a lot of what they call moonshots. So they have the driverless taxi thing with Waymo. It's in several cities, and it keeps expanding to more and more cities. And the people who like to hype Tesla and their autonomous driving is a joke. Alphabet's is a lot better, and it's not a concept. It's actually in several cities now, and it works. And if you go by the two most important metrics, which is the number of miles driven and the number of miles that a car has to go before the backup driver has to grab the wheel, Waymo, which is partly owned by Google, is number one on those metrics. So I think even at these prices, you'll do fine if you invest. And I think I'll do fine if I kept it there. And again, I'm not saying to buy or sell. I'm just saying that I have a lot of this, and that's the only reason I'm selling, because it has grown so much that it is over 20% of my portfolio now. And some investors like to say, well, just sit on it, and who cares if it becomes 50 or 60% of your portfolio. And that's fine if you're in your 20s, but if you're in your 50s, like I just turned, I think it's a little more risky because if you think of a bunch of alternate universes, like in the Marvel universe, You want the outcome where you're doing great in all of them, not the ones where you make a choice and in some of them you're doing great and the other ones you do terrible. So think about two scenarios. One, you had bought Amazon cheaply and you never sold it, and now you're worth $50 million. And think of another scenario in which every time Amazon doubled, you sold some and invested it in the S&P 500 or whatever else you wanted. And in those alternate universes, instead of being worth 50 million, let's say you're worth 7 or 8 million in all the other universes. 50 or 100 million is better than 7 or 8, but remember, you're worth 7 or 8 in every alternate universe versus maybe 50 or 100 if you held. But consider this, what if it wasn't Amazon? Because you don't know until you look in the rearview mirror how it's going to turn out. What if you had invested in a company called Netscape, which was the darling of the dot-com boom and eventual bust, and instead of selling a little bit every time it doubled, you just held on for dear life? Well, Netscape eventually went bankrupt and never paid a dividend. So in that universe, you ended up with nothing. So until you look back, you don't know if the stock you own is the next Amazon or the next Netscape. And given that, if you're making a decision for yourself, do you want to make one where sometimes you're worth 50 or 100 million and sometimes you're worth zero? Or do you want to make the decisions where sometimes you're worth 7 or 8 million across every alternate universe? And that's not an investing decision, that's a philosophical decision, and it deals with your risk tolerance and risk aversion. So it's a choice that everyone has to make for themselves. And I had a great run with this, and it's performed really well, and it's currently the largest one in my portfolio, but at over 20% of my portfolio. It's getting a little big, so once it crosses a certain threshold, I might start trimming it. But if I was starting over, and my default was to put it in the S&P 500 index at 30 times earnings, and with companies like Palantir and Tesla that are trading at huge multiples and don't have great business models, in my opinion, I think this is a pretty good idea. And ditto for Meta, which I have about a 5% position in. But anyway, that's my thoughts. What do you guys think about Google? Do you own it? Do you not? Would you buy more at this price? Leave your comments below. And if there's anything else you'd like to see, just leave a comment. Like and subscribe so you'll see future videos like this. And if you want to support the channel, there's a Robinhood link where you can sign up and I get a commission and you get a discount. And there's also a Buy Me a Coffee link if you want to support the channel but don't feel like you have to. Have a great weekend, everyone.